Ooh, all right. Nice film or sound to get us kind of going there. So, round 5 of the practice rounds has been completed, and yeah, we'll crown a winner for round 5. But let's look at it first and see. Let's keep everybody in suspense a little bit. So, I know these guys up in front are kind of worried about it. So, we'll take a look. Every team except Ferris made a profit this round. Not picking on you guys or anything, but we should take a look at maybe why. I mean, why Ferris kind of suffered a little bit, and we will. Baldwin, to their credit, had been really not doing so well. How's that for? It's tough to be politically correct sometimes. I'm sorry when we're talking about it, but they had a nice turnaround. How's that? Yeah, very nice turnaround. They actually made a profit this round. That was pretty impressive. Maybe you guys won the stock price change. I don't know. How'd your stock price do? I didn't even look, so it didn't do much, huh? I thought you might have taken a good bump. You didn't quite get over the hump in the low end there. And we'll talk about what you did wrong there in a second. I kind of glanced at it and I thought, what, they didn't do it? And then I saw what you did and probably why you did it, I know. But I think that that cost you guys a significant amount of cash flow. I don't know profit-wise if it would have made much difference really. But it also helped big-time other teams. Yeah, you really helped the other teams score. They were able to sell $1.1 million more in low-end products that they wouldn't have had you guys gotten a little more aggressive there. So, do you know what you did or didn't do?
What did we say?
Maybe we left one instead of just taking it all out, so it sold at half price instead of.
Right. Right. Yeah, when you leave one in there as your capacity, it still tries to sell it as a normal product, which in some cases that's a wonderful thing. I mean, if you're just slowly trying to exit a segment, you might want to do that. You might want to cut your capacity down to one. You can sell it, raise money, right, by selling capacity and whatnot. And it's going to sell it in a competitive fashion at whatever price you set and all those other things, and hopefully get rid of it. If you reduce, and what Baldwin and I had talked a little bit about ahead of time, if they had sold their capacity completely, I think, I was kind of anxious to see, but I think then, according to the guide anyhow, it's going to sell out your inventory. It's going to cut the price in half. Boom, it's going to sell it. Away you go.
I remember now it said that if you left one, it was going to cut it in half, but if you took it all, it would sell it less than.
Now, if you leave one, it sells it for whatever criteria you've given it. In other words, so if you've got a price set at $20, it's going to try to get $20 for it, but it's going to have to compete. So it may not sell at all, which you found out it didn't sell at all. Had you reduced it to 0, then it would have just, boom, just sold it, right? It would have been a clearance sale, and everybody shows up to buy it for half price, and away we go. Which would have, like I said, I'm not so sure because your costs, remember, your cost of goods sold are recorded in the period in which you sell the product. So I'm not so sure that it would have made any difference in your guys' profit. Would have helped your cash flow because you'd have sold 1,000,001 units at $10. You'd get $10 million or whatever maybe, and so that would have been a benefit. But it certainly would have taken sales from these other groups. So it could have had an impact on the eventual findings, I guess we could say. So. Andrews had pretty good sales, second best sales, but not a lot of profit. Okay, I think if we look at it, we'll see that they had a decent contribution margin at 31.5%, which I think your guide tells you that anything over 30% is good. I think I have said that other teams, and by the time we get to the 8th round of the competitive rounds, we're probably going to see some pretty high contribution margins. We got up to, just in the practice rounds here, Erie at 49.4%. That's pretty impressive. Okay, but 31.5 would certainly generate a lot of profit. But we see that their SG&A to sales was really high. And in fact, as an industry, as a group, you guys are all pretty high. Okay, Boy, you go from 20.9 to 18.6 for Team Erie, to 11 or 12.5, 11, 12.4. That's pretty high SG&A, but like I've said before, every game takes on its own persona, and so if you get some teams that aggressively pursue that, sometimes other teams have to follow. Okay, and so it can kind of dictate where a game goes a little bit, because it can certainly have an impact on some things. I was looking at the numbers in some of the individual segments when it came to the SG&A, and it's really kind of interesting. So we'll look at those as we go down. And again, contribution margins, look at that. We got 1, 2, 3 teams that are over 40%. So that's pretty impressive. 49% after 5 rounds is really pretty good. I mean, that's really darn well played, I guess you could say. Again, really high SG&A though. So, if you could have 49, imagine that. If you could have 49.4% and a 10% SG&A, they would have made an additional $10 million before tax, 12, that'd be about $12 million before tax. So, stock market survey. Look at that. Every team, that's interesting. Every team went down except Team Baldwin. Well, what happened this last round in terms of the economy?
Recession.
Yeah, we had a recession, right? I mean, the demand went down, so we knew it was going to be a little bit difficult, okay? And so it doesn't surprise me. And Baldwin, that's probably why you guys didn't go up. The only reason, you guys did a nice job of turning it around and whatnot, but we're looking at a market that's a little bit weak because we're in kind of a recession, and so Baldwin didn't go up as a result of that. Look at that. We got a $6 dividend by Team Chester. Wow. That's a pretty good sized dividend. Team Digby paid out a $2.15 dividend, which isn't too bad, but 6%, that's pretty good. And their Chester's ROE, 14.4%, and they paid out a 6% dividend. That's, as an investor, that'd be kind of cool. That'd make you kind of happy. We might talk about the impacts of that dividend, especially in terms of your next assignment. We'll probably see some things up here in the cash flow that we had some end of game structuring going on, if that's a way to put it, and that will always happen. Okay, the only team that's not going to play an end of game is going to be Team Digby, right? Every other team understands that we're done with the practice rounds, and so we just as well do some structuring things, right? That might make some sense. Team Digby did not. Some of the other things might have hurt some of the teams. We'll see. We saw Team Baldwin, for example. Now, they were actually, this probably isn't end of game for them because they were kind of in a position where they needed to do some of those things, and so they did. And they sold a lot of capacity, you can tell, because they had a positive cash flow number here. So that can only mean really selling capacity. Okay, in terms of plant improvements. I wanted to step up here. Inventory, Andrews had, while they had good sales, they had a lot of inventory, pretty decent sales. They had an increase in inventory. Let me back up and make sure I say that correctly, because when we have negative cash, it means that we have an increase in inventory, right, in this section. Baldwin sold down quite a bit of inventory, in spite of not selling that low-end one. Every other team had bumps up in inventory. So while it looks like everybody knew that sales were going to decrease, it wasn't fully accounted for in your projections. Okay, it wasn't fully accounted for, apparently. Okay, apparently. Accounts receivable, no big changes there. Okay. Again, plant improvements. You see, this is just a FYI though when we get to the competitive rounds, because the computer's position isn't really going to change. Okay, so in round 5, the computer's still investing a lot of money in plant improvements. That's just kind of an FYI. $39 million. Okay, Baldwin again sold some. Chester must have sold a little bit of capacity, did some stuff there. Erie sold a decent amount of capacity too, it appears. So dividends, big number there, $13 million. Okay, the question probably that I'm going to write for your assignment is, Chester had a higher ROE, we saw that up above, by about 2%. Was their dividend payment the difference? Okay, and how can you calculate that? Okay, because when you pay a dividend, what are you doing? What are you doing to your balance sheet when you pay a dividend? Decreasing what part of it? You're decreasing cash, and that's also going to decrease. Bingo. Okay. Yeah, so you're going to decrease cash, you're going to decrease equity, right? Okay, and so what effect is that going to have on ROE? Assuming your income doesn't change, and it wouldn't, right? Because your dividends is paid after the fact. You've already calculated all your income, your taxes, everything else, and your dividends are paid after the fact. So all it does is changes your balance sheet. Change your balance sheet by reducing cash, reducing current assets, and thus also reducing equity. It has to. Okay?
So if you have a negative cash flow, does that help your ROE?
Question here was, if you have a negative cash flow, does that help your ROE? Not necessarily. Because if you're spending money on equipment, machinery, those types of things, you're just trading. Okay? But it's affecting cash, but it's not affecting assets. Okay. What was I going to say? Conversely, you could be borrowing. Yeah, borrowing would just be a trade too. Yeah, forget where I was going with that. So, okay. Purchases of common stock. So we see three teams pretty aggressive in buying back some stock, and teams paid off some current debt. Digby borrowed a ton of money. Wow. And that always amazes me. The computer doesn't do a very good job of managing cash, obviously. They had $59 million in current borrowing. They got $59 million in cash. Okay, that's a bit of a, why did you borrow $59 million if, in fact, you didn't need $59 million, obviously, right? If they wanted a little cushion, they could have borrowed $5 million and they'd add a little cushion. So they're going to pay interest on $59 million, on current interest. So, and what you guys are paying a pretty high rate, 10% or something like that. So I would guess that their interest expense when we get down to the income statement is going to be pretty high. Okay, and because they got this kind of current debt outstanding. So Baldwin look at that, ended up with quite a bit of cash. Again, that can be a bit of a negative, though, too, right? You guys needed to transform your company, and so that's probably not a bad thing. It would set you up. If we were going to go on, this would set you guys up to be able to make some investments and whatnot going forward, which would be wise. Okay. Accounts receivable, nothing big there. Inventories, we said, on a balance sheet basis, and we saw that up above, that probably had some decent inventories. And so there's a lot of inventories. If we were going onward, we'd really have to do some calculations. I'd really want to sharpen my pencil and see what the inventories are in each segment. Because you can see here, what's that? 90 million, 120 million, 150 million, 190 million, about $200 million in inventories that are out there when you talk about all 6 companies. So there's a lot of inventory, right? Current assets, plant and equipment, total fixed assets. Amazing. Look how big Team Digby is, and look how small Team Ferris and Team Baldwin are, right? That can, being small can pay off, Baldwin kind of suffered. They're in a decent position now if this game were to go on being as small as they are, right? They'd only have to earn a quarter as much as Team Digby for ROE, right? So if Team Digby earned, let me go down, I got their income right here. Team Digby earned a total of $8.8 million. Team Baldwin, if they earned $2.2 million, would have roughly, this is really off the top of my head, so my pencil's not sharp at all, but they would have roughly the same ROE. Okay, roughly the same ROE. Earnings per share, maybe not, right? Unless they were really aggressive at the start buying back stock, which they haven't been. So earnings per share might go the other way, but you could certainly have a great ROE, okay, by earning significantly less. And as an investor, I'm fine with that. ROE is a good measure Okay. Earnings per share is a good measure in this game only. Remember, I got to keep reminding everybody that in real world, comparing earnings per share is meaningless. That's apples to oranges. Okay. The earnings per share of Microsoft to Apple, completely meaningless. Absolutely doesn't matter whatsoever. Okay. Berkshire Hathaway, for example, earnings per share about $15,000 per year per share. Okay. Apple, a much bigger corporation, even than Berkshire Hathaway, not much bigger, but quite a bit bigger, earns, what the heck do they earn? I got to think about it now for a second. I think they earn, oh shoot, about $10 per share. Okay, so you got one company that's earning $15,000 per share, and you got another company that's earning $10 per share, and the company that's earning $10 per share is way bigger, way more profitable actually than the other company. Okay, so you can't compare earnings per share in the real world. We can here just because we all start out the same. So, and it's important here because we all start out the same. Oh, let's see. Let's take a look. Variable costs we don't worry too much about because we go back up to that contribution margin again. That's what really matters there. Look at the depreciation differences. Again, Team Digby had a big company, right? 180 million in total fixed assets. So you'd expect that they would have a huge depreciation, and they do. Okay, big depreciation. The SG&A, look at that. Team Andrews spent $39 million. Okay, some in R&D probably, but I think we're going to see down below they spent a pot full of money in sales and promotions. A pot full of money. That's the politically correct way to say that. But Digby and Erie were not all that far behind. Okay, again, pot loads of money in SG&A, so mainly probably promotion. I say that too because in the last round of the deal, I can't imagine that a ton of money got spent in R&D. You'd spend a normal amount that you'd want to keep your products up and going, but I can't imagine that you'd spend over the top types of money, and so that's pretty cool. And I said interest that Team Digby, they had 59 million. They should be paying a lot of interest. Look at that, 18 million in interest. So two things. Look at Team Digby. What did they have? EBIT was 32 million. Let's go up here and look at their gross profit. Their gross profit was a little over 80 million, 82 million, which is higher. Chester had 63 million, and Erie had 72 million. And they had about 82 million, Digby did, in gross profit. Okay, when you start detracting from that, what are the main things you look at? Well, way more depreciation, way more interest. Okay, the interest is purely cash management, right? I mean, they just screwed up on their cash management, so they got an extra $6 million in interest, probably $5 or $6 million that they didn't need to spend. Huge impact, Even in an after-tax basis, that would put them well ahead of our two student teams. Okay, so poor management there. I don't know where they were sitting with capacity. I got to go the other way. Sorry. Way too much capacity. Okay, way too much capacity. So, maybe they're gearing up for things to come. That's very possible. Maybe Digby, unlike you guys, maybe Digby didn't know there was a recession either or something. I don't know. And so they might have just been building capacity. They might have just chosen this. Maybe it's a cheap time to buy capacity. I don't know. Okay, but way. Look at their capacity versus the next biggest team. I mean, it's almost twice as much, right? So they got a huge amount of capacity that they're, again, I get back to, while they didn't pay a lot of overtime, what are the things that they're paying? They're paying depreciation, they're paying some interest, okay? Yeah, the interest was partly cash management, but also if this was half, I mean, not only could they have gotten rid of the $59 million that they borrowed, they would have had excess money otherwise that they could have done some things with, right? And so it's huge. Okay, so I would say poor cash management on their part and poor capacity management. Maybe they just thought they were going to sell more. I don't know. And you guys beat them. Oh, what do we got? Interest was big. Oh, other fees, write-offs. Team Chester, look at that. Again, this is a direct impact to income, right? So they spent, in spite of this being the last round, this is a little unusual in the last round. Usually I'll see teams try to maybe back off on TQM and whatnot in the last round because it's a direct impact to expenses. It's not a full $16 million impact because you get some of that back, right? You get some of that back because you're saving variable costs and you're saving administrative costs and you're saving cycle time and you're increasing demand. You're doing some different things that are very, very helpful. But yeah, that's a huge investment in the last round. So, and in spite of that, it still had the highest profit. So again, those offsets can be worth it. The main thing to remember is that those offsets are going to be worth it in the long term. It may be close in the short term, and it's probably going to cost you more than you get back in the short term. But next round, if this were to continue going, you know, Chester would get some good positive impacts from that.
What round does TQM start? The main ones.
4, same thing. So we'll start in round 4.
You should start it earlier. Yeah.
I should start it earlier. No.
We already tried it. You know what it is.
Yeah. Round 4 is good.
Round 2?
That's not realistic.
It's been my experience. I used to start it in round 5,
You wouldn't
and I
go-
did move it up to round 4, and that's a pretty good spot.
You wouldn't have a multi-million-dollar company that didn't do TQM for 4 years.
He's right.
Well, I don't know. If they didn't know about it, right? If it wasn't available to them,
Well, then they're hiring the wrong people.
well, it could
Our
be.
company is not hiring the wrong people.
Oh, you guys screwed up. Sorry. You got
We're gonna
me.
hire a hacker to hack into the TQM.
Are you? It had Apple, and Apple set up its encryption. So sorry, FBI hasn't even been able to hack into that. So I don't think you're going to get there either. So
Do you lose points if you get caught hacking, I wonder?
I don't think so.
I don't think it should be any more than an emergency loan. It's basically all it is.
I'll tell you what, point wise, you'll do just fine in the game, but grade wise, you'd get an F. So you know, you guys take it from there.
I feel like we need stonewalled here.
Yeah.
He's just cheating the computer again.
I know it. I do everything for the benefit of the computer. So,
I think he's actually the computer. He just says it's.
I think I'm actually the computer. No, I've never. I don't know that I've ever set the computer on its highest. I'll probably be looking at doing that in the next couple of semesters at its highest level of competition. I wouldn't do it in the practice rounds, but I could flop it in the competitive rounds. And I'll probably do that because you guys are coming in now with more knowledge of the game, and so you're getting off to a little better head start and those types of things. At least 2 teams beat the computer here in the practice rounds. That's a little bit unusual. In the past, usually I get the computer team wins in the practice rounds, like all 5 rounds. We're looking at it like that. Competitive rounds is where the teams really catch up. So I'm pretty confident that this is going to be one of those competitive rounds where at the end the computers kind of go and I give. So confident that you guys have figured that out and will figure it out, that you're going to kind of dominate maybe what the computer does. Some interesting things on here, and between last night and this morning I didn't get to dissect this as fully as I probably would have liked, but one thing I glanced at here, I looked at Erie had a really, really high contribution margin, right? 49%. And look at here, they sold 4.1 million units in the low end, and they had a 64% contribution margin there. Okay, that's the biggest contributor to their contribution margin. And what's the main factor? Look at this. In the low end, we had labor costs that ranged from $1.46 for Team Erie to $9.44 per unit, okay, for Team Ferris. Okay, now you're talking $8 per unit, and they sold 4 million, so that's $32 million, right? If you were had the same amount of sales, Ferris obviously didn't have the same amount of sales. Okay, that is just unbelievably huge, right? Ginormous, whatever term you would like to put on that. Okay. And that, obviously that makes it extremely difficult for Ferris to have competed in that low end. If you even, though, break it down, let's go look at somebody that had sales that were even a little closer. Chester had 2.5 million. They had a 49% contribution margin, which is absolutely wonderful, right? But their labor cost still 438 compared to 146. So we're still talking about $3 difference, right? $3 per unit difference, which is, on their sales, $7.5 million. Okay. Now, the question you got to be asking yourself is what made Ferris's labor costs that much less? Erie? Erie. What made Erie's? I'm sorry, not Ferris. What made Erie's labor costs that much less? Thank you.
Just being good.
Just being good, right? They're treating their employees well. They actually didn't invest a lot in HR, which is kind of surprising. When I looked, I thought, they must have invested a bunch in HR, but they didn't. Okay, their labor costs come down even further, right? If they invested in HR, substantially more in HR. Okay, but what really affected their labor costs? It's right there on this report. Mostly, the big thing is,
Automation.
yeah, you look at their automation. No, we don't need to point that out. I'm sorry, but it's right there.
Giving away all our secrets.
Giving away all their secrets, man.
Now everybody's gonna be stealing our strategy.
All these secrets, by the way, are in the guide. Okay, so I'm not telling you guys something that's not in the guide, which I would remind you that it might be to your benefit. It's 24 pages. I read through half of it in about 5 minutes before class because I was looking for some other information on cost savings. Because the automation does not fully account for that savings. They got an additional bump because investments prior years in TQM that accounted for that. But on the other hand, Chester, for example, invested quite a bit more in HR. And so I was still trying to figure out, and I wasn't able to put my fingers on it. And I'd have to go back and look at some prior rounds. It's possible that Chester made some investments this round in automation, and so they're not fully accounted for and some different things like that. But I was trying to pinpoint, all the differences in the cost. Because you get down to $1.46 for your cost with 3 rounds to go, that's pretty low. Okay, that's pretty cheap in terms of labor costs. Can it get lower? Yeah, I've seen teams get it significantly lower than that.
I really know what Chester did,
What's that?
but I don't want to say.
Okay.
I'll tell you.
Okay. Garrett's going to tell me secrets about what Chester did.
I can't give away my
Okay.
golden secrets to the class.
Okay. Traditional, look at Team Andrews, really dominated in terms of the sales. Remember up above we were saying that they spent a lot of money in SG&A? And I don't know if this was, again, it might have been end of practice round, let's see what the heck happens type of strategy or tactics, I'm not sure. But 2.7 million and 5.6 million respectively in promo and sales budgets. So a total of, what the heck is that? $8.3 million. That's like, just kind of glancing, that's twice as much as any other team, maybe except Erie. Erie spent for about $5 million. Okay, so that's a lot of spending. Now, Erie didn't do very well there. Okay, they were really a poor investment there. They spent $5 million, really didn't generate a lot of sales. I can tell you just glancing at it, it's probably as much because of their age, possibly. That age profile is a big one. Take a look at some other things that might have contributed. I didn't see if their price was out of whack. No, their price was low.
We're only 0.39 off. We're only 0.39 off the age.
Yeah. These ones are younger. That was your age at December 31. You don't know what it might have been. Your revision came in kind of late. Yeah, I don't know. That's a good question. But age would be a factor, definitely.
Kind of on the back end of the perceptual map.
On the perceptual map, and that's,
Not significant,
between
don't
the price and the position, though, they're both pretty close. Okay, and so that could make a difference. Your positioning there might have made a decent difference on that one.
So you had the best price.
Yeah, and these other teams sold, and the potential and actual, there isn't any big difference up there. Yeah, you guys had the best price, so I would say that the age factor was probably a decent one there. Okay, probably one of the main factors. You obviously spent a lot of money.
Going over the age does have
I think you want to be.
significant
this close to without going over is, I think.
Well, remember, this thing it's moving, right? And so your guys' product changed, it revised on October 3rd, okay? And I don't know what the age was then, but it probably just got to about 2, right? Which was the ideal age. And then now it's getting older again. So it was probably 3 years old when it revised, which isn't that good. Revised down to 2 and then started to get old again. And so your customers were looking at that, always saying that, yeah, this is a product that's a little bit behind the times. Whereas this one, let's look at the number 1. You know, it about the same revision date. You know, September versus October. But when it revised, it went down to about 1.5 years, right? Okay, and then here it is at the end of the year, and it's getting pretty close to what the customers want to see. Okay, and so that's probably why its December customer survey looks pretty good too, right? Because it's age-wise, it's looking pretty good. Your guys' is decent because you're spending a lot of money too, in addition to their spending a lot of money. So, okay, low end. Obviously, this one was dominated by Erie. It's interesting. The teams dominating, you know, are right back here in the back end. Okay, so positioning-wise doesn't make a heck of a lot of difference in the low end, right? Price is far more important. Age is far more important. MTBF, just the one team, Cedar. Did that have an impact for Chester? That might be a good question. I think I'll ask that because it's in the guide. In terms of their cost, I might ask that question. Lowest price. So Ebb, even though it had the lowest price, had by far the highest contribution margin. Okay, so that's pretty impressive. You know, their contribution margin was 10 or 15% higher than anybody else's, and yet their price was lower. Not a heck of a lot lower than Cedar, but quite a bit lower than the other teams, and yet it still had just a blowout contribution margin. A little bit of disconnect here. Baldwin gave up some sales in the high end, fortunately. It looks like Digby was the beneficiary of most of those sales, so might throw out another question about that, how it affects profit. Okay, so we've gone one more step further, and so how would that have affected profit would be the next step. What we see, though, here, too, in between the performance size and high-end products, no team competed with the computer team, okay, in the practice rounds. Not even close, okay? And I can say that just in looking at the perceptual map. I'll go down and look at the bigger one. Okay, you just glance at it and say, it ain't even close. Okay, you could say, well, Erie's up there kind of trying. Nah, they're way behind. Okay, to compete, and by the way, the computer team too, keep this in mind, FYI, they're introducing another new product, okay, and they will again, you know, their tactics are going to be roughly the same when we get to the competitive round, so they will again introduce another new product, so be wary of that. And no team has pushed them, okay, in the high ends. Now, they haven't been able to take as much advantage of that as they should, okay, probably because of the decisions that they make and whatnot, but and there's enough teams here that are kind of hanging around, you know, picking up some of the scraps and whatnot. But Digby's really, and we'll see that here when we get to the market shares and stuff in each of these. You know, we come back to the high, right? Look at Digby dominating, you know, actual 40% of the market, okay? But they didn't sell out, okay? I'll bet you they got a pretty good high contribution margin in those areas they should. Look at that in performance, better than 40% potential into actual. Again, they didn't sell out, but look at that. Two products that they have, both number 1 and number 2. And then in the size category, Andrews pushed them a little bit, but 35% of the market in the size category. They only had the one product there. They're introducing the other one, if I'm not mistaken, right? That's going to come into the size end, so they're going to end up having another one there. That'll probably push them above the 40%. So what does that mean? It means that if you're going to compete in the high end, if no matter what your strategy is, other than a niche low end, you're probably still going to have some products competing up there. And I'll tell you, you got to start hitting that from the first round. Because if you're not pushing your products about as far forward as you can every round, you're never going to keep up. Okay, you'll never keep up. So on the R&D side, you have to keep pushing it. Now, when you get to TQM, and we'll talk about that, you can reduce the cycle time. You can, maybe in rounds 5, 6, 7, do some catching up, depending on what they do, right? But you can do some catching up, but by then it may be too late, right? You've already given up market share and all those things. So if you're going to compete in those, if you want to compete, if you just want to get breadcrumbs, that's fine. But if you want to compete in the high ends, you got to push that a little bit. In the actual potential, you might get some questions from that. Okay, so what's Ferris's strategy? Anybody know? Can you tell by looking at that? It's a little tougher, isn't it, right? Kind of a sofa bed type of strategy that we talked about early on, right? Really kind of in between. We got products in all three of these categories, but they're kind of way at the back end and they're really not doing much. Okay? Is it okay if I pick on Ferris a little bit? Okay. I'm not picking on you guys. I'm just okay. That can be said a little bit of Chester. Chester a little bit better, right? And they took advantage of it a little bit more, and they certainly took advantage more in these ends here. Okay. It does kind of look to me, like Ferris is maybe a life cycle low cost, if I had to bet. Okay. I would tell you that most of the time, if you were doing that, these two products would either disappear, and maybe would have disappeared by now, or I've seen teams move them over to compete in like the traditional segment then. So you start moving them towards the middle and then let that traditional segment come in and envelope them and be competitive there. And also, by now you would have had to, if you were true life cycle, you'd probably introduce another product up here. Okay, so you'd have this line of products that are just constantly look like they're moving, even though it's the segments that are moving, right? Okay. I can say the same about most of the teams, though it's a little bit difficult because we don't see that they've really pushed. It's obvious that Erie did as good a job as any of the student teams in pushing their products out here a little bit, okay? But that could be, they might be broad low cost. I would say that's probably what Chester's is, broad low cost. So maybe you don't want to compete heavily up there. You want to keep your costs low, so you're not investing a ton in R&D, right? You want to keep your costs relatively low and catch some sales up there. But if you're not the big seller in those areas, that's fine. And instead you concentrate maybe on trying to really improve your sales down here. That's kind of what Erie and Chester, I would say, probably both did. They might both be kind of a broad low cost. And I can go back and check and see if I should deduct some points from either team. Productivity again. I was a little bit surprised that Erie didn't have a better productivity number because they had such a low cost up there, low labor cost up there. So they obviously got the labor cost from some other things. We get Baldwin did a pretty good job. Probably contributed greatly to their profit. They're getting a pretty good productivity index there. Chester, a good productivity index. Still not in that low end anyhow, not all that competitive. Chester spent a lot of money. We saw that, right? A ton of money here. Okay. Erie spent a decent amount, and Erie had spent some money before. Okay, so Chester hadn't, and Chester did some catching up this round in terms of TQM spending. Baldwin spent a lot of money here, and that probably helped them turn the corner profitability-wise. You see some big numbers starting to, when you start looking at the cumulative investments, you start to see some big numbers here. Okay, this number here you don't pay a lot of attention to, that reduction in R&D cycle time. 40%, 25%, 40%. So right now, Team Baldwin in R&D, right, if they wanted to do some catching up, they could move their product 40% further and still keep it in the proper year. Does that make sense? You know how if you make too big of a change in R&D, your product gets out too far and your revision date's out there, okay? So they could move it 40% further and keep it in that same year as any other team. So you could really start to make some, some improvements, especially if you were competing in the high end. Okay. If you were a low-cost niche, wouldn't even matter to you, okay? I wouldn't want to spend a penny worrying about the cycle time if I were just low-cost niche, okay? If I were low-cost different or low-cost broad, I'd want to spend some money there. I'd want to be able to try to keep my products, especially my high performance and size ones, kind of competitive. Okay, and so looking at that, that's a big deal. Chester's at 25%, so huge. Okay, be able to do some catching up to Team Digby, some catching up. Okay, again, Digby dominated those markets. Plus, Digby's got 2 products now in 2 markets, and so. That's a little bit tough to compete with. I don't think any of the student teams, did any of the student teams introduce a new product? Yeah, that's kind of interesting. A little bit unusual. Any questions about how the round went, other than who won? Anybody got bets about what team won?
But it's either us or Chester.
Garrett says it's either Chester or Erie.
Yeah, that's what I'm thinking too.
Okay. Now so you got a 50-50 chance if you think it's between those 2 teams. So any other bets then as to which one of those 2 teams? You want to see? Can I keep you in suspense any longer? I can try. You guys will get upset pretty quick though if we don't get going, so. All right, here we go. We'll take a look.
You already got it?
Yeah, I already did it. So
You already know.
I already know, yes. Do you hate that I would know? I'll keep myself in suspense from now on. So.
You always got all that stuff in?
This was just the most convenient way to set up the spreadsheet, if that makes sense, because I can copy and paste that whole report. It'd be a pain to just copy and paste certain parts of it, and so I just set it up to do that, and then I had to create some amazing formulas, to actually do the scoring and whatnot. And I'm thinking I should update it, and I might a little bit, because I might start doing some more pro rata types of scores versus absolute scores. I think that would make more sense. In other words, if your ROE was the highest 15%, but the next team had 14.9%, maybe that shouldn't be a 2.5 point difference or a 3 point difference. Maybe that should be just a modest difference, right, in the score. And I could probably do that. That takes some more thinking and some more doing, but I shouldn't say probably. I know I could. It'd just be. Okay, earnings per share. Team Erie had the best earnings per share, followed by Team Chester, and then our computer team, Digby. Ooh, but ROE, we flopped. Okay, and Team Chester ended up with the best score there at 25. So as we speak now, Team Erie has a 1/2 point advantage. 1/2 point advantage. Ooh, Team Erie now improves to a 2.5 point advantage because they had the highest contribution margin, with Team Baldwin the second highest contribution margin. So Baldwin made a lot of progress. You guys did a nice job in that round, just because you guys were kind of wallowing. How's that? Is that a good enough word? Is that politically okay? Our presidential campaign's making political correctness kind of go out the door a little bit, which I'm kind of thankful for. So we don't have to be quite so politically correct anymore. Oh, but we get the stock price change, and look at that. The Baldwin did win in terms of the stock price change, simply because, remember, theirs was the only team that didn't go down because they couldn't go any lower. Sorry.
I have a question on that.
What's that?
Why wouldn't you take the overall price of the stock price versus the stock price change?
Because it's what have you done for me lately? And I hate to say that, but that's the reality of the world. It's what did you do for me last quarter? What did you do for me last year? versus what you've done for me in the last 10 years. Because Team Baldwin, for example, right, they kind of stunk it up, but they made some good decisions, and shouldn't they be rewarded because they turned things around and made a bigger increase in their stock price? Now, this is one that I really need to change, because I think I got this based on the dollar amount, and it should be based on a percentage change. So I need to go in and change my formula there.
Your stock price is at $0 and you have $0. Versus if your stock price is at $60, it wouldn't make any sense.
Theirs didn't go down, and rightfully so. Theirs, like I said, theirs probably would have, if this had been a little bit more if we didn't have a recession, I think their stock price would have gone up better than the rest of you guys. Okay, because they went from literally having a huge loss to all of a sudden having a gain, and investors would really take note of that and would jump on board and say, maybe there's a turnaround taking place here. And so they deserve the stock price one. I mean, there's just no getting around that in this case. Could there be some other times when maybe don't deserve it quite as much? Maybe, I don't know. So I say if I did the percentage thing, I think that would make more sense actually. Okay. Profits. Chester. Ooh. Man. Ooh, Chester. Oh, they made up some ground, didn't they? Interesting. Cash flow, though, Erie comes back with 4.5 versus 4 for Team Chester. So have you guys been keeping track? Who's ahead now? It'll add it up right here. Strategy, I didn't take any points away. I probably should have for some teams, but I didn't. Ooh. 93 for Chester, 92 for Erie, but do we have any deductions? Team Erie definitely had an emergency loan. However,
$1.5 million was all.
which I don't discount for. The limit there's $5 million. That should be a pro rata thing too that I should calculate in there a little bit. Okay, Andrews had an emergency loan, big one. So did Ferris. Nothing. Erie, and Chester, nothing there for leverage. Can I make it go any slower?
There's nothing else that we can do.
Working capital, nothing. So look at that. Team Chester by 1 point. Tightest round that we've had. Tightest in a long time. Hmm. I've had one time in the past when I've had two teams that tied, and that was pretty interesting. So. Thanks for coming. I guess they're done.
They're mad about the 1.2.
You think so?
Well, I don't think so.
Gosh. Should assign a bonus question now, just between now and Thursday. You guys want a bonus question between now and Thursday? Yeah. We could do that.
Is it gonna be a hard one?
Huh?
Is it gonna be a hard one?
No.
Easy one, like why is Erie better than Chester even though they lost by 1 point?
I would agree with the stock price personally. That gives
Hey,
a good percentage
all
in the
of us
future.
still won 2 categories.
Yeah.
Baldwin did extremely well.
For the
That was
record,
a
stock price, I'm
that was
saying
a
it.
that
If it
was a
based
nice
off of
comeback.
Total stock price, we would have won.
Hey, but it's not, so.
Hey, Baldwin.
We
Right.
had a significantly better
Nobody
stock price
copied
than
me,
Chester.
Because you guys
Right.
have 0.
Oh well.
And part of the reason for the better stock price is buying back a lot of stock. You guys have done a good job of that. Yeah. Yeah. And so increased stock price over time is a big deal, had I been an original investor. But again, this is, it's tough to score, because there is an overall component that you could plug in, and then there's also what have you done for me lately component, right? The real world kind of is what have you done for me lately? I mean, literally, people get fired if last quarter didn't meet expectations sometimes, and so that kind of happens in the real world. I don't think that that's necessarily right, but boy, I mean, we could really make my scoring thing far more complex than it is now, and it's fairly complex the way it is now, and so, I don't know.
I mean, our market cap, book value, PE.
Garrett just takes it out.
And the market cap's important because, too,
Close.
because you guys have been buying back stock and yet your market cap's still pretty high. Because what's market cap? Here's your question for Thursday. Okay, and I'll give you the answer before we leave. But what? Unless you guys should know it. You guys should be able to give me the answer. Okay. So, question for Thursday, and I'll set up a Dropbox for it. Okay. What is market cap? What does that mean?
Total how many they can sell, right? Shares?
Yeah, total shares is a component of market cap. So what's market cap? Team Digby's market cap is $195 million. What things contribute? So it is higher than Team Erie's. What things contribute to market cap? There's only two. Market cap's equal to
Shares outstanding.
shares outstanding. Got that. Times. I'll even give you the stock price. Yeah, that's it. Shares outstanding times the stock price. So it's what the investors feel that a particular company is worth, really, right? Okay, here we'll have two parts for Thursday.
So
What's
our company is worth 138 times.
according to investors, this is in millions. So according to investors, your company's worth $138 million.
And Baldwin's is 2 million, but they win the stock price.
Right.
I think we should just give us 2 points for stock price. I think that's what we're getting at here.
And I think the answer is no, because your guys' stock price declined by $8.62. Your guys' stock price declined more than every other team except Andrews. So you guys had the second to the worst performance in stock price.
But we still beat Chester.
In terms of stock price?
Yep.
Well, you've got a higher stock price, right? But their stock price only went down $1.38. So it had far better performance than you guys last round. Okay? That's a huge difference. We're looking at this from, again, round to round. So Chester, their stock price only went down $1.38. That's pretty impressive, actually, when you look at how everybody else did, right?
I thought due to their dividend they paid.
Dividend paid might have made a big difference. Yeah. You got a recession going on, but you got a company that's saying, who cares? We're going to pay a dividend because we can afford it, and we're managing our company, and shareholders go, ooh, that's pretty cool. We'll do that. And they actually had still a pretty good return on equity, 14.4% in a recession. I'm happy with that. And I got a dividend. I'm pretty darn happy. Okay, so the second part of your question for Thursday, what company in the world has the largest, and I got to look this up too because I'm not 100% sure, the largest market cap?
So are you going to give me bonus if I tell you why Chester screwed up?
What company in the world, I'll just ignore that, has the largest market cap? Can you guys make some guesses?
Apple.
Maybe. They might have got passed, actually. I'm not sure.
Didn't they used to?
Oh, yeah.
It seems like about a year when I was taking your
Yeah.
business finance class, I think they had it.
But 2 years ago, they were competing really big with Exxon. Both of
Yeah.
those were huge.
I think Facebook maybe too.
Not Facebook's not close. And Exxon, of course, got really affected by fuel prices or oil prices, right? So Exxon's really, really come down.
Facebook is 12.
Okay. And Apple, though, in the last little bit has come way down. There's one company that may be getting kind of close. I got Google maybe.
Google's in second, Apple's in first.
Are they?
Yep.
Okay. That's kind of what I thought, but it's pretty close, isn't it? You got the total amounts?
537 billion
For Apple?
for Apple. And then
Google?
Google is 501.8 billion.
So about 30 billion difference, yeah. Yeah, so pretty close.
Microsoft, Exxon. Facebook is in sixth.
Yeah. Berkshire's in the top 10, I think.
Burke A
but-
is
Yeah,
fifth.
yeah, yep. Okay,
Burke
so
A doesn't ever make it, do they? For market cap, because that Burke
They
B
combine
is
them.
the cheap one.
they combine them. When you're figuring market cap, it's the same. They're just listing it as Burke B or Burke A, but it's combined when they figure market cap. Because you just have total shares outstanding times the price, and you'd add them together for Berkshire. Okay, so your two questions, right? What is market capitalization? What's the biggest market cap company? Okay, I'm done now. I'll turn off my record.